Welcome to You and Your Money. Today's episode features Leisl Langevin, Senior Vice President and Financial Advisor at WHZ Strategic Wealth Advisors.
Retirement assets tend to be the largest asset, but anytime you're dividing assets at divorce, you always want to count up all of the money, the assets, that you have, and also consider what debt or liabilities that you have, and those should all be considered in the whole picture. But when it comes to retirement accounts, and typically your 401k is your largest asset in divorce, and there's a lot of rules and tax implications and long-term consequences that can come with dividing retirement accounts. So it's really important that you divide them properly so that you can avoid some of these unexpected taxes. There could be penalties, and then a potential for your financial future to be impacted as well.
Sounds pretty complicated. So how do couples typically go about dividing these assets?
Well, the process really depends on the type of retirement asset. But for something like a 401k, there's a qualified domestic relations order, which is a we call it a quadro. And that's something that goes through the courts as you're going through divorce, and that helps to divide a 401k and gives the 401k providers the authorization to make that division of the account. And for IRAs, there's something, it's typically your divorce decree, and that's called a transfer incident to divorce. So both methods allow for division of assets, and it does not trigger immediate taxes. So that's really important. Taxes and penalties, that is.
Leisl, explain a bit more about what a QDRO is.
Absolutely, yeah. So a quadro or a QDRO, it's a court order that instructs the plan administrator, so the 401k administrator, on how to split the investment assets in a retirement 401k between the spouse who owns it, so they're called the participant, and the receiving spouse, known as the alternate payee. And the reason it's so crucial, and I had mentioned this before we took the break, because it ensures that the division is recognized by the retirement plan and the IRS. So then you avoid unnecessary taxes and potential penalties. And so, because if you took that money outright instead of, and then rolled it into an IRA, let's say, that money would be subject to a 20% withholding, tax withholding. And so you'd like to avoid that, because if you don't intend to use the money, you'd rather have it all rolled over into an IRA and then continue to be invested for further growth.
Did you say IRAs are handled differently?
They are, and so they're divided through a divorce decree. So it's all held within the same document, the divorce document. So it's not a separate quadro that requires a third party to handle that. In a divorce decree, as long as you have the documentation and you can provide that, it can be divided. So it's a similar process, but it just is one less document, and it means that assets can be moved directly into an IRA for that receiving spouse. And so it's a little more simple than a quadro.
Sounds like there's a lot of potential pitfalls here. What are some of the common mistakes people make with this?
Sure. So one of the biggest mistakes is not understanding the different retirement plans and how they're valued. For example, a 401k that has a pretty clear balance and is pretty straightforward, but there's other things that are part of retirement assets, such as a pension that pays future monthly income. So you have to do a present value calculation to get back to today's value to figure out how much is that pension worth, and how do you compare it against the existing assets that you have. Some other things to be careful of. So on the quadro or the transfer incident to divorce or divorce decree, you want to make sure that you specify a percentage of assets versus a dollar amount. And that, of course, is relevant today, as we've seen markets have taken a hit over the last month. And if you're specifying an amount and that drops, your account value drops, you could be giving over more than, let's say, 50%, if that's really what the target number was. So definitely specifying a percent is important. A division date is always important to make sure that's within the document so that you don't have to question when are we supposed to value these assets. And then, of course, distributing without providing a quadro, and I had mentioned this, you're going to get a 20% withholding federal tax on that, and that can have a huge tax implication. And so you just want to make sure that with each of these different types of retirement accounts, there's different tax rules that you should be aware of and divide the assets accordingly. And one other example I'll give is a Roth 401k versus a pre-tax. So in a Roth 401k, that's money that's been contributed after tax. So when you take that money out, it's not taxed. Whereas a pre-tax 401k, you are taxed on that money when you take it out. So if you think about dividing up assets and one of the spouses gets all of the Roth 401k versus the pre-tax 401k, that's going to the end result will be a significantly different amount. So if you want to be fair, you have to take those things into consideration.
That's really good information. Now, I understand there are special considerations for certain types of retirement benefits. Tell me how that works.
Sure. So, there's all different types of couples that we work with, but one of them, military retired pay and government pensions, those have their own sets of rules and limitations. For example, if you are currently active, in active duty, you can actually request that you have a 90-day stay to attend court appearances and things like that. So that requires an extra set of documentation to be able to do that. And then there's also the rule of 20, where if you have 20 years of service and you have been married for 20 years, then the ex-spouse may be eligible for TRICARE, which can play a huge role in divorce. And then the cap on any support as it relates to military pay it's capped at a certain amount. So can't go above and beyond 50 to 65%. So, and we've seen that in other divorces. So it really just depends on the type of divorce that you're dealing with. Also, some other complicated, and this has to do more with employee stock options that need to be carefully assessed for their value and key dates. If you're familiar with employee stock options, there's vesting dates and grant dates and things like that need to be considered. And so you just want to make sure that you're factoring all of that in, because sometimes those, particularly in those executive compensation plans, retirement plans, they're not always available right away. So always special cases that require careful attention.
Sounds like navigating all this would be challenging without professional help. What role does a financial advisor play in this process?
Well, so a financial advisor, and I know you mentioned I'm a certified divorce financial analyst earlier in the call, and we can ensure that accurate asset valuation, making sure that quadro language is right, and then keeping your long-term financial interest in mind. And some other important things to consider, too, is really to help that whichever spouse is coming to us, help them to set expectations. So sometimes they come in wanting everything in all of the assets, and so you have to sort of help them realize that that's likely not going to happen. Establish your new solo financial plan. So that's another thing that could help you to just realize where you are now as a solo or a single individual, and how that's going to work out for you. Making sure, again, accurate asset valuations, looking at those long and short-term goals, and then most importantly, again, is just the tax laws and regulations that go into dividing up these assets, making sure they're fair.
And let's go back to what you just talked about, that you are a certified divorce financial analyst. Tell me what that means, and what kind of training goes into it, and what specific areas that you focus on with that specialty.
Sure. So, certified divorce financial analyst. We've received specialized training. I've taken specialized courses and then had to sit for an exam to become certified. And so demonstrated the knowledge and skills required to help clients and divorce-related financial issues. And again, this is a certification that requires continuing education too. So not only did I pass the certification, but in addition, I have to stay up to date on what is currently happening as it relates to divorce, division of assets and things, and what's being decided in court. So it's something that has come in handy. I mean, obviously, you never want to plan for this, but if it happens, it's something that we can help clients through. So it's been really helpful.
And you're not a divorce lawyer, but it would be fair to say that what you do as a certified divorce financial analyst is an important complement to what the divorce lawyer does to make sure that the money is going to the right place, especially the retirement assets.
Exactly. Yeah, no, that's a huge part of this, is to collaborate with the attorneys and even accountants. And we do this when we're planning for clients normally, is working with attorneys and accountants to make sure everything's titled correctly. But when it comes to a divorce, is to help them through that division of assets, collaborating with the attorney, being on the same page, understanding how the division will happen. I mean, it's really ultimately up to the attorney to decide and work through it with the client, but we can provide additional information and say, this is how this will be taxed, and here's what the end result will be. So it's really helpful.
That's fantastic. What final advice would you give to our listeners who might be facing the prospect of dividing retirement assets in a divorce?
Well, my main piece of advice would be to seek professional help early on in the process. And again, it's emotionally challenging. It's easy to make financial decisions based on short terms, like, oh, I really want this money now, but how does it impact me for the long term? So being a financial advisor and a divorce financial analyst, I can help to understand those longer term implications of the different division of asset strategies, and just make sure that you're making informed decisions. I mean, I've seen the cases where clients have taken large distributions out of retirement accounts and not realized the impact of that. So, and I've worked with them after the fact. So it's really important to meet with somebody that you trust, and someone that will help you through this process, and just help you to really reassess your financial goals and create a new plan for your future. So can help you navigate that transition and know that you have a solid financial plan in place. So that's really important.
Do you get occasional times, hopefully rare times, when you get a couple in there and they're looking for financial advice, in this particular case about dividing retirement assets at divorce, when one party does not know what the other party has for retirement assets, meaning they don't communicate well, but now because of the law, because of the rules and regulations, it's full disclosure time, and the other party finds out for the first time what the other party has as far as retirement assets?
That's always been an interesting one too, is seeing that everything come out in some of these meetings, and I mean that we always try to have clients aligned and understanding what the joint goals are. I know sometimes even finances can cause divorces to happen, so it's something that we certainly plan for. But no, you're exactly right.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Merrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.